Most of what you've been told about passive income is a lie. If you spend 5 minutes scrolling through social media in 2026, you're bombarded by gurus telling you to buy a course, start a dropshipping store with zero capital, or just in index funds and wait 40 years for the magic of compound interest to save you. But the old math is broken. Inflation isn't just a headline anymore, it's a predator. And traditional savings are the prey. Relying on a 4% annual return when the cost of living is jumping by double digits isn't a strategy, it's a slow motion financial suicide. Last month, my digital infrastructure generated $3,072. That is over $3,000 produced by machines and algorithms while I slept, without a traditional 9 to 5. But I need to be clear, this isn't about getting lucky on a meme coin or hitting a jackpot. This is about building a digital utility. In the industrial age, wealth was built on oil and steel. In 2026, wealth is built on compute and code. Today, I'm pulling back the curtain on my exact framework. We're going to look at the hardware, the algorithms, and the secret sauce loop that allows me to scale these numbers every single month. But before we get to the numbers, you need to understand the fundamental flaw in the way most people approach money. They look for wins. I look for loops. To build a $3,000 monthly stream, you need a foundation that doesn't rely on your opinion or your hope. You need math. For me, that foundation is hardware mining. I treat my miners like digital real estate. In the physical world, you might buy an apartment and rent it out to tenants. You have to deal with maintenance, bad tenants, and property taxes. In the digital world, I own high performance ASIC miners. My tenant is the blockchain network itself. I am renting out computing power to the most secure networks on Earth, and they pay me in the most pristine assets ever created. Source 1, the gold standard Bitcoin mining, $1,036 per month. My first income source is the bedrock of this portfolio. Last month, my Bitcoin miners brought in $1,036. You'll hear skeptics say mining is dead every time the hash rate climbs or the price dips, but they're looking at mining through the lens of a consumer, not an operator. As an operator, I don't look at the daily price fluctuations. I look at the difficulty adjustment and the hash rate as market signals. Bitcoin is the only asset with a truly immutable monetary policy. When I mine Bitcoin, I am participating in the issuance of the hardest money humanity has ever known. That $1,000 a month isn't just cash flow. It's digital gold that provides the bedrock of my financial stability. It's the Class A property in my digital real estate portfolio. It is predictable, secure, and globally recognized. But here's the first open loop. If Bitcoin is the gold standard, why isn't it the only thing I mine? If it's so stable, why diversify? The answer lies in velocity. Bitcoin is the bedrock, but for a system to grow, it needs high velocity cash flow to fuel the next stage of the machine. This brings us to my second income source. Source 2, the cash flow king, Doge Mining, $875 per month. While Bitcoin is the gold, Doge Mining, specifically script mining, is the cash flow king. To many, Doge is still a joke or a meme, but I look past the branding to the utility. My Doge miners generated $875 last month. Why? Because the script network demand remains incredibly consistent, and the competition is often less institutional than Bitcoin. By utilizing specific hardware, I can secure the network and extract rewards that provide a different yield curve than Bitcoin. It's higher velocity, it's liquid, it's the commercial retail of my portfolio. It brings in consistent, high volume traffic that keeps the gears turning. This hardware is working 24/7, turning electricity into a liquid asset that I can use to fuel more aggressive plays. However, mining alone creates a massive problem that most people never solve. You're left with a pile of digital assets in a volatile market. If the market drops 40%, your hardware income effectively drops 40%. This opens the second loop. How do you protect your hardware income from the very market it lives in? Most people just hodl and pray. I use an algorithmic engine to force the market to pay me regardless of direction. Source 3, the algorithmic engine, trading bot, $811 per month. If mining is my real estate, then my third income source, my trading bot, is my high frequency business. Last month, my crypto trading bot generated $811. Now, let's have an honest conversation about bots. 99% of the bots you see advertised on social media are scams. They're black boxes designed to drain your API keys and your wallet. My bot is different because it operates on a very specific, transparent logic. It doesn't try to predict the future. It exploits volatility. The market doesn't move in a straight line. It breathes. It expands and contracts. My bot is programmed to buy the inhales and sell the exhales. It doesn't care if the market is in a macro bull run or a bearish winter, it only cares that there is movement. By taking 1% gains dozens of times a day, the bot creates a compounding effect that is mathematically superior to human trading. For a human trader, this is impossible. You have to sleep, you have to eat, you have emotions, you feel fear when the red candles drop, and greed when the green candles spike. The bot has none of that. It is a cold, calculating machine that executes the logic perfectly, 24 hours a day. $811 might not seem like a life-changing fortune, but when you realize that money was made while I was sleeping, eating, and working on other projects, the ROIO, my time becomes infinite. But even with hardware and algorithms, there's still a missing piece of the puzzle. There's the dust, the small leftovers, and the residual value that most people ignore because they're too busy looking for the next big win. This leads us to the final layer of the infrastructure. Source 4, the low voltage layer. Alt token staking, $350 per month. Finally, we have the fourth income source, alt token staking. Staking other altcoins rewarded me with approximately $350 last month. This is the most passive of all the streams. In mining, you have hardware and electricity costs. In bots, you have active market management. In staking, you have collateral. I am essentially acting as a validator for various blockchain networks. By locking up my assets to help secure a network's proof of stake mechanism, I receive a dividend. Think of this as the savings account of the future. In 2026, if you put your money in a traditional bank, they offer you 1% interest while they lend your money out for 10 times that amount. They keep the spread, you keep the inflation. In the decentralized world, I cut out the middleman. Staking allows me to capture 5 to 12% APY on assets I already intended to hold for the long term. It's $350 that requires zero maintenance, zero electricity, and zero oversight. It is the purest form of set it and forget it. The secret sauce, the yield recirculation loop. Now, we get to the part that actually matters. This is the part that will either make you financially free or keep you in the cycle of working for money forever. Anyone can buy a miner. Anyone can start a bot. But most people fail because they eat their seed corn. When they make their first $1,000, they buy a new phone. When they hit $2,000, they upgrade their car. They treat their passive income as spending money. They're essentially killing the golden goose before it can lay the second egg. I use the yield recirculation loop. This is how we close all the loops I've opened today. Every dollar generated by my Bitcoin and Doge miners is treated as raw capital. I don't touch it. I don't use it to buy dinner. Instead, I loop those profits directly into my trading bot. This is the first stage of the loop. By feeding the mining profits into the bot, I increase the bot's working capital. More capital means the bot can take larger positions, which increases that $811 monthly return. The second stage of the loop is the overflow. When the bot generates excess profit above its target, that overflow is used to buy more staking assets. This builds the $350 residual stream without me ever having to deposit new money from my bank account. The final stage is the expansion. Once the staking rewards hit a specific threshold, that money is used to buy more hardware. This is a closed loop system. I am no longer putting new money into the system from my pocket. The system has become a self-sustaining digital organism. It grows, it breathes, and it scales while I go about my life. This is how you move from $3,000 a month to $30,000 a month. It's not about finding a better play, it's about better plumbing. I wouldn't be doing my job if I told you this was a risk-free money printer. It isn't. Hardware fails. Miners need cooling, cleaning, and maintenance. If you aren't prepared for the physicality of digital assets, you will fail. Markets crash. If the price of Bitcoin drops 50% tomorrow, my mining revenue in dollar terms drops with it. My digital real estate becomes less valuable in the short term. But here's the investigative truth that the mainstream media won't tell you. Risk is the price you pay for freedom. The risk of building a digital utility is high, but the risk of doing nothing, of relying on a single salary from a corporation that could fire you tomorrow in an economy burdened by a massive debt ceiling, is infinitely higher. I choose the risk I can control. I choose the risk that has an upside. You don't need $100,000 to start this. You don't even need 1,000. What you need is a shift in your thinking. Stop looking for wins and start looking for loops. Last month, I made $3,072 without a job. Next month, because of the recirculation loop, that number will be higher. Not because I'm smarter, but because my plumbing is better. The question isn't, can you do this? The infrastructure is there. The code is open source. The hardware is available. The real question is, are you willing to stop spending your profits and start building your utility? If you want the exact settings I use for my trading bot or the hardware specs for my Bitcoin and Doge miners, I've linked my deep dive research in the description below.